Okay, my name is Dougal Cameron. I'm the founder of Golden Section, and I've been at the firm since its beginning in 2011. And right now I serve as the CEO and one of the general partners in the fund.
Wonderful. What is your background in finance and economics?
Background in finance and economics. I studied history and math in undergrad, but I've always been drawn towards economics and finance. That was really my goal in college, is to get access to jobs that would expose me to finance after graduating. And so I went to work for the Federal Reserve during the great financial crisis, coming out of school with a degree in history and math, and started studying the CFA designation. And I earned that charter in 2012.
Okay.
And in earning that charter and working for the Federal Reserve, that really scratched the itch for me of economic research and finance and weaving those together. That ultimately led me to software, because I realized that software is an area of enormous information asymmetry. And the information asymmetry is a key way to earn an outsized return or gain what the market calls alpha. And so I found that in small companies, particularly in software companies specifically.
And so you decided to translate that into venture capital and investing in companies, in B2B SaaS companies.
Correct. Yeah. And we discovered, a lot of people have discovered this, but the more information asymmetry there is, the higher earning potential there is above the benchmark return. So think the market or the S&P 500. And information asymmetry comes in unique knowledge about how a business works, or unique access to businesses that other people can't get. Both of those are present in early stage venture capital. So these are founders that are not financed by other companies. Typically, we're the first round. In addition, we have information because of the number of reps we've had, helping founders grow their business, helping product teams build the right product the right way. That gives us an edge on the market in general, which means that we can help founders navigate the murky, difficult landscape of building an effective product and bringing something to market that's hopefully special and unique. And in our guidance, helping founders get to the end zone, which means that hopefully we can earn a better return than the S&P 500, which has been the case historically for our firm. And we're excited for the current present environment where there is a lot of volatility. People are trying to figure out what the future is going to look like. And based on a lot of different theories on what the future looks like, you see the market react day by day, up 3%, down 3%, et cetera. And that reaction presents a lot of opportunity for business leaders. It also presents a lot of opportunity for us at Golden Section on the investment side of our business, investing in companies. Interestingly, that opportunity comes at the exact same moment that founders find themselves and business leaders find themselves at a loss for what to do. So the market looks really volatile. It's hard to know what direction you should go, or whether you should invest in technology or pull back, or whether you should build a new product or not, or whether you should lean into growth, like hiring up for a new capability or not. And based on all of that volatility and all of those different expectations of the future, those are the key moments where firms like ours can help founders navigate that difficult terrain. And not just founders, but also more increasingly on the whale song side, business unit leaders.
Yeah.
Information asymmetry is the term for when people have different levels of information about a certain thing. And so you can think about information asymmetry in the software space would be what type of tech stack on the business logic layer goes with what type of database. Now, that's a relatively small amount of information asymmetry because you can solve it with the internet. So the internet and technology itself fights against information asymmetry. It's leveling the playing field of information. 100 plus years ago, there would have been an enormous amount of information asymmetry, just proximity to the physical markets in New York City, and, where the market actually clears. Just being present there gives you price information asymmetry that other areas of the country might not have access to. And so because if you as a firm had a representative on the trading floor at the New York Stock Exchange, you would have better pricing information than another firm operating, hundreds, if not thousands of miles away. And so that information asymmetry gave you an edge because you could communicate that information to your other office, and then they could activate trades based on that information. And so the more that the markets have become universal and access has become universal and information has become universal, the more that premium for information asymmetry has been competed out of the market. In general, that's a really good thing. So most markets tend towards eradicating the information asymmetry premium that a market participant would get for using that special knowledge. There's a couple of areas where it's going to probably be a long-term premium. And normally those are the areas that are smaller because there's just more friction to learning how to, invest in and scale up an early stage company. There's also a lot of unique knowledge to the space, given that software as an industry is new. In one sense, it's been around for 40 years. That's not super new, but it's new when compared to the Industrial Revolution. And most of the other companies operating on the New York Stock Exchange have been, or are in industries that have been around for hundreds, in some cases, thousands of years.
Interesting. So given the current market backdrop right now, what do you think most business leaders are facing?
I think they're facing a big question about what to do. I think that's the primary thing that they're facing. And the market is showing us that. Business leaders, through their participation in the market, through pulling out of their own mutual fund, if they're an individual actor or if they're institutional, their trade decisions are causing that market uncertainty to be reflected in the price. And so companies are gaining and losing billions of dollars in market cap on a daily basis. That's irrational. Companies are not actually gaining and losing billions of dollars. That's the market competing for what the future might look like. And I think in that competition, you see a lot of volatility that's displayed in volatility metrics like the VIX. It's also displayed in just watching your own brokerage account change day by day, which ideally no one should do. And it's also displayed in economic indicators. The University of Michigan sentiment survey recently came out with an all-time low on the consumer side, in addition to inflation expectations, which typically runs counter to the sentiment survey, has also posted one of its highest readings, I think, since the 80s, if I recall. And that's reflecting in the interest rates. So interest rates are starting to rise again because inflation expectations are rising. And the expectation going into this year, the biggest issue is not so much that inflation might go up. It's that starting this year, most businesses didn't plan for it to go up.
Yeah.
They planned for rates to drop, for inflation to start to moderate. And both of those things are starting to turn the other way. And in addition, you've got now a fight between the fiscal and monetary powers. And that fight is translating into additional market uncertainty. Who's going to win, Powell or Trump? And that question on the business unit leader level is causing one business unit leader to think a certain way. Maybe inflation is going to increase. Powell will not win the argument, but that's going to mean higher interest rates. Or the fiscal authorities will win, and that's a different paradigm. And so because there's a lot of different visions of the future out there, there's a lot of uncertainty on the business unit leader level. In addition to that, real interest rates have risen, which indicates that the 10-year TIPS most recent auction posted its highest level since, I think, the 2008 time period. Might have been earlier than that as well. So it's posted at least a local maximum, if not an absolute maximum. And so because of that rise in interest rates, businesses are going to have to really look at all of their financial decisions, all their investment decisions with a new light, a new input into the discounted cash flow analysis based on the discount rate that they're using. And so because of all of those changes, I think businesses are asking themselves, should I go and take that additional risk? So risk has increased on the future. Businesses are asking, should I take that additional risk of launching in that new market or going after that new vertical or whatever it might be? And I think that can translate into questions around technology and whether they should adopt a technology or not, or whether they should build a new application or not. And I think a lot of business leaders are trying to get some level of certainty on what the future is. And I think in all cases, because we know the technological wave that really hit us in COVID and has continued to hit us through increased user adoption from things like whether or not a business unit leader is going to fly to a conference to meet people face to face, or instead interact with the people that they know through Zoom meetings. Decisions at that level are impacting whether a company's adoption of technology is going to translate into inflation or not. So technology adoption is inherently deflationary. It reduces the inflation rate, the greater the technology adoption curve. And so during COVID, there was one set of theories that the post-COVID time period would have been met with unprecedented deflation because there was so much technological adoption. And I can speak even from our firm's perspective. We've been an international company since 2011, having teams all around the world in virtually every corner of the of the globe. And so as a result of that global experience, we've been early adopters for web meetings and video meetings. And even our own adoption of web meetings, or Teams in our case, has been small in comparison to what has occurred from 2020 until now. And so as an example, when we raised our fund in the early 2010s era, if you're going to raise capital from somebody, particularly if it was in the millions of dollars, you would have to go on site, meet them in person, and show them the respect of a face-to-face encounter. In the post-COVID time period, everyone was in Aspen, or they were traveling. They were not in their office in a major metropolitan area. And that habit has continued largely. So as a result, as a fund manager raising capital, I could stack meeting after meeting and meet with 10 different people at once in 5 different time zones and not skip a beat. And that translates into a lot more productivity for me as a labor input for the same amount of cost. That's deflationary by definition. And so what I think has been interesting is the expectation post-COVID was a lot of deflation. The reality post-COVID was a lot of inflation. So what happened? It was an enormous amount of fiscal stimulus into the environment, into the ecosystem, or into the economy. That fiscal stimulus also paired up with a change in lifestyle. And both of those things resulted in inflation locking in and being stuck for the long term, because the labor market got very, very tight, mainly because of things that were supposed to be deflationary, like remote work. So remote work became the norm. The labor market, all of a sudden, somebody in Pittsburgh could compete with somebody in Houston for the same job. And that was inflationary. It should have been to some degree deflationary, but it was inflationary because it stuck, particularly in the high paying wage markets. That became the standard for pay. And so then that spread all over the entire country. And then that had to trickle down into the prices of those producers. And then we felt it at the gas pump, essentially, eventually. And as we felt it at the gas pump, the result was inflation, even though the entire economy has become a lot more productive. And so I think in the long run, we're going to see that translate into deflation. That's going to take some time.
So as business leaders do pursue this new reality of where we are today, what would their limitations be, or what do they need to be aware of as they, are making financial decisions or technology decisions?
I think they need to be aware of the limitations of technology and the dangers of adoption. So I think a lot of business leaders, myself included, can expect too much out of an implementation of a new piece of software. And users wear software. They wear technology kind of like an exoskeleton to perform tasks. It has to feel right to the end user. And so just because the business unit leader mandates a new tool doesn't mean it's going to be adopted. And if it's not adopted, you're not going to reach that promise of what the future could be, that promise of human potential. Instead, you're going to end up with a lot of pain. And so the question that I ask for a business unit leader as they're thinking through what they should do about adopting technology or leveraging technology is, how much are they expecting the outcome to be? So how much are they baking? What is their definition for success? And I think what they should do in terms of gaining some of these productivity gains is define a definition of success as something that's reasonable to hit. Like, for instance, just a 10% increase in productivity across the employee base in most firms would eradicate most of the volatility and perhaps all of the tariff impact that most businesses are experiencing right now. So all the volatility that they were going to encounter, or they didn't expect to encounter this year, and now find themselves encountering, could be completely removed by applying technology and finding themselves incur a little bit of a productivity gain. So what does it take for a line leader or a important role within the firm to have a little bit of an increase in productivity, 10%? And that 10% impact means that your business can create 10% more goods for the same labor input. And for most businesses, that's going to remove the difficulties that businesses are encountering right now.
What does it mean for companies to embrace that risk and to be able to kind of weather the storm over the next several months, if not years, as some of these macroeconomic factors are playing a part in shifting the way they were planning on doing business over the next 3 to 5 years, per se?
Yeah. I think a lot of businesses are going to feel the pressure to adopt buzzwords because they're flying around right now.
Mm-hmm.
And I think in the face of a lot of uncertainty, in the face of having to perhaps reduce headcount, having to reshuffle an org chart that you weren't expecting to do in Q2 of 2025,
Mm-hmm.
or having to adjust pay in the expectation of a lot more inflation, there's going to be a lot of wage pressure in the next year or two, particularly because risk on the individual level, on the employee level has increased,
Mm-hmm.
in addition to risk increasing, which potentially could be deflationary depending upon the market. There's also an increase in all the consumers' expectations on what goods are going to cost.
Mm-hmm.
And so that means that there's going to be a push for a higher wage increase. And so businesses have to be ready to embrace that risk. And that probably means getting out ahead of that to look for productivity gains that could exist.
Mm-hmm.
And I think that means getting beyond the buzzword of AI and beyond the failed implementations of those tools, in addition to so many other software products that have been picked up but not taken all the way to the goal line, and reducing the scope to say, what would it look like to take a particular given section of my company and truly experience a 10% increase in productivity from that group
Mm-hmm.
with something that's logical, makes sense, and isn't buzzword laden.
Right.
And I think what that means is looking for trusted partners that know that technology well. I think it also means looking for really short putts to value.
Mm-hmm.
And so as an example, a business that we were talking to the other day was exploring a key metric that a faster process, the technology could bring to the table, a faster process, moving a decision-making process essentially from 10 minutes down to about 30 seconds,
Mm-hmm.
that would have an enormous impact on their bottom line.
Mm-hmm.
And it was to the tune of $3-ish million, which translated to about 100% increase in their EBITDA.
Mm-hmm.
And so I see opportunities like that that are very logical, make a lot of sense, are pretty small lift, pretty small investment as a great way to weather a uncertain economic climate.
Mm-hmm.
Because the thing that you can be certain of in this economic climate is you don't know what 6 months from now will look like.
Right.
And so the best that you can do is to take the things that you do know, like what a particular cycle looks like or what a process looks like today, and ask the question, can you apply AI? Can you apply a faster routine? Can you fully adopt the ERP that you're using
Mm-hmm.
and make it work for your company with custom reporting and other components that mean that you can actually manage the adoption of that tool
Mm-hmm.
in order to shrink the cost for your organization to produce the good. So now you're all within your walls. That's
Right.
something you don't have to depend upon your customers or your vendors or
Mm-hmm.
other parties to do for you. And you can look internally and try to reap some of those gains to offset the uncertainty of the market.
Any other nuggets of advice or insight from what you've seen in the market lately, and any words of encouragement for companies that maybe are not taking this well with what's going on?
I think it's interesting to look at a really long perspective in history. So one
Mm-hmm.
paper I read recently made the argument that we're in an 800-year cycle of essentially moving into negative real interest rate territory.
Mm-hmm.
Whether that happens or not, we'll see. But there's certain economies like the Japanese economy that's a good example of this. They were enormous adopters of technology. They still are.
Mm-hmm.
A lot of automation, a lot of technology at the business unit and down to the line level. And adoption of those technologies, they're still enormous adopters of technology. They're experiencing the first world problem that most economies are predicted to go into of really low population replacement rates
Mm-hmm.
and a aging population that's rapidly aging because the younger population isn't backfilling, which isn't really the case in the US yet, but there's a lot of predictions that we're heading that direction. And so therefore it's no surprise that their interest rates were at or near zero and have been since the late 90s. And I think that lends some credence to this 800-year cycle, something I'm thinking about right now.
Mm-hmm.
But even if you don't go across 800 years and you look to just the last 100 years and look back to the Great Recession or the Great Depression in
Mm-hmm.
the 30s, you can see that is a pretty minor blip in the grand scheme of things. Even if you take a 20-year view, and 20 years even before, during, and after the Great Depression, it shows up as a minor blip, even though it's a major historical event.
Yeah.
And so I think what we're facing right now is nowhere near the scope and scale of that, like
Okay.
not even in the same ballpark.
Okay.
And so I think that there's a lot of reasons to be excited about what the future could hold, in addition to looking for ways to adopt technology to bring about that future where the human input is more than the caricature that you see on commercials about AI, but is truly living out what humans can only do, which is a creative input into a process. And all of the things that people don't like about their job, the death of a salesman narrative of the American, entrepreneurial dream can fall away, and people can live the full realization of what their job could be. And so I think that that's the future the business unit leaders need to look for and fight for within their organization, which means looking for ways to adopt technology and go beyond the buzzword into something that can harness the human potential that they have within their firm, and not look to necessarily replace people with technology, but equip and arm them with the tool that they need to be as productive as they can be. And I think that downturns like this that we're in right now are classically and historically great adopters of technology. 2020 is a great example.
Yeah.
Huge downturn. Everyone was terrified. Everybody moved because of primarily a health fear and then an economic fear into enormous technology adoption. And I hope that this downturn will cause a similar technology adoption, which interestingly is also a path out for the economy. The more technology adoption that occurs, the lower the inflation rate will be, which means that on a purchasing power basis, the more goods and services all of us can afford for the same amount of pay.
Yeah.
And if that corresponds with the amount of work that we have to do that we don't like to do dropping, while we're also able to afford more goods for the same amount of pay, that's a win-win across the board.
Yeah. Okay, so let's dig into a little bit more of the practicality of implementing, something that could save that 10%, or that could grow your bottom line 10%, that could increase that EBITDA. What do companies need to be aware of, or what kind of triggers are there that they need to be aware of? What green flags are there to help them understand what that looks like from a practical perspective, and to also consider the risk that may come with that in terms of cost or investment?
Yeah, that's a great question. I think getting to practical reality within a business is super important here, because we can stay at the buzzword level and not get down into implementation. And I think the first thing I would say, and I'm going to come back to something I think should be maybe a precursor to this discussion, but the first person that we manage is ourselves. And so I think as a business unit leader, it's each one of our objectives and our responsibility to ask the question, how can I become 10% more effective? And so if I set that as a goal, and maybe I find out that I'm 25 or 30% more effective, but if I set 10% as a goal, which means in a 40-hour week, I'm looking for 4 hours of work that I would have had to do that I don't have to do now. And so the work of management is in some ways different than the work at the business, at the line level. But I think it's the same question and the same practicality. What do reports have to write? What do reports have to run? What is feedback I have to give? What are things I have to do that I'm spending a lot of time in the execution stage, and instead I can move my time to the creative, strategic, thoughtful stage, and instead outsource some of that execution into an AI tool, and use that as a way to partner with AI and produce a goal of 4 hours of input or impact on my week. And then track that like you're tracking anything else in business. It's a KPI that you're looking to prove out. And then I think sharing those insights with a trusted team of friends would be something I would do immediately. So colleagues, maybe inside the business, maybe outside of the business, develop a bit of a professional network to discuss and share these ideas. You're going to hopefully receive reciprocation of that share and get other ideas from other people. And you again might find that you go from 10 to 20 to 30% productivity gain. And then as a leader, you want to bring that insight down into your team. So I think that this happens at any level of the business, CEO down to the line leader. If someone doesn't have any direct reports, maybe they're just a subject matter expert or an individual contributor, they can apply this to their own workload. And if the output, ideally the output is that they can argue that their position has a lot more impact in the business, which is going to be great for them long term. But even if it doesn't, if they're not able to get kudos necessarily from that output, there's a built-in gain that's unique to software, which is that the participant gets more of their time back. And so for the same pay, the same output that they're producing, or ideally their output grows, they may find that their work becomes a lot more meaningful and a lot more fun.
Yeah. And I think there's a message there too that, those department leads or, the people who are doing the work and producing the productivity, they need to be an advocate for technology solutions that will increase their productivity and therefore the bottom line. Because that has to, it has to work its way up to those decision makers when trying to, implement a new system or process or tool. So yeah, I think that's.
Yeah. I think that the technological landscape that we're moving into right now is moving from big horizontal monolithic systems into much more niche vertical systems. And that migration means that a participant, the user of the system, is ideally going to feel a lot more fit with the product. And I think what AI unleashes, which is interesting, is it's a very personal experience. It's down to the individual level. It's like having software built just for you. Right. And so as a user, it's going to be very hard for that to be a mandate from the top down. And so I think within all firms need to explore how individuals and how you as a participant in your firm can leverage AI as something that can make your job more impactful and then share those learnings. And so if I was a manager in a larger business right now, I would be having weekly discussions with my team about how are we using this tool and then trying to track as a KPI, can we prove out a 10% productivity gain? Can we maybe prove out a 20 or 30% productivity gain? What is a number that we can hang our hat on and then bring that message throughout the entire firm and look for trying to lock in those gains as a strategic advantage to our organization.
Yeah.
And I think also one of the benefits of software in general, but innovation investing, is that as a business unit leader, generally you're held to profitability goals around EBITDA. And technological investments typically are capitalizable. That's not always the case. And in the world of AI, that's going to become a little bit more muddy, I think. However, a lot of those investments can be capitalized and then they fall below the EBITDA line while also improving EBITDA. It's a double gain. You're investing $500,000. It doesn't pop up in your P&L, pops up on the balance sheet because it's a long-term asset. It's not super long-term, but it's a capitalizable asset. In addition, ideally, your EBITDA grows by a couple of basis points, maybe a couple of percentage points, maybe 10%. If you have a 10% productivity gain and nothing else changes, your EBITDA is going to grow 10%.
Right.
And so that's something that I think is a area that I would explore as a business unit leader. And then the practical implementations would be looking for those use cases, sharing those use cases, and looking for areas where your organization might have installed a horizontal system or adoption is really, really low. And then ask, are there vertical systems that we could subscribe to or build perhaps, and then integrate them into the horizontal system as a data, infrastructure layer. And I think a lot of businesses are heading that direction right now. Web services have made that incredibly easy. The transferability of data and the accessibility of cloud computing systems has also made that easy, which means that most businesses have the data accessibility to make AI very impactful to their organization. They just have to think really small, like very tactically, where 4 hours of gain I can look at my calendar and then bring that message to my team and ask that weekly and then share that within our organization. The thing I mentioned before that I think comes upstream of this, that a lot of businesses are going to struggle with, is the fight with internal IT. So what's allowed to be accessed from our organization? How do we maintain and protect our data and not let it leak out into the LLMs? Right. And I think that the unfortunate, perhaps uncomfortable reality for most business unit leaders is that your team's doing that right now. Like that is happening across the board. There's no way that ChatGPT is getting the amount of usage it's getting during business hours without people in businesses using it. And so as a result, I think business unit leaders need to ask the question, how do we get out ahead of that? And that doesn't mean blocking the website. That doesn't mean blocking access to those tools. That means figuring out how to have that discussion and that capability inside your environment in a safe way. That means that you're not going to have your data leak out. You're not going to breach one of your MSAs with your vendors or your clients. And instead, you're going to be able to harness the power of AI because every user is getting an individual benefit. And that's a little bit new. It has not been the case historically that an individual participant within a business would go and subscribe to an ERP
Sure.
to use it personally.
Yeah.
In some cases, that popped up in the kind of sales tech area and some marketing tech, where individual users would get a lot of value out of their own CRM. They would use that to make their speed to get commission faster.
Mm-hmm.
That type of problem was a pretty big problem for internal IT groups really across the last 20 years. And I think that is spreading to every role within the business right now because of AI.
Yeah.
Because it's a pleasant thing to not have to produce something that an AI can do.
Yeah.
And so because of that, most people want to go and use the AI to do the productive thing. And as a business unit leader, I would ask the question, how do I handle that risk? Because that's happening right now. How do I harness that potential, put it within my firm, protect my data and my customers, my vendors, my team, and what's special about us, while also giving the exact same horsepower to my team that they're looking for on the retail side.
Yeah. Yeah. And I think, kind of reiterating to, start small, find a very specific use case and start there. It doesn't have to be, a big enterprise implementation. It's just get your foot in the door and start somewhere.
Yeah, start somewhere.
Yeah.
I think a lot of software builds and a lot of implementations of off-the-shelf systems is really a hammer running around looking for a nail.
Yeah.
Instead of defining what is the nail I need to drive into what piece of material and then finding the right hammer for that.
Right.
And I think that AI can be that type of a problem. You see how it's marketed today. It really screams for an adoption for a use case that's specific and narrow in scope. And I think one of the issues, to take a side tangent, one of the issues that I see happening a lot right now in AI adoption is people using it outside of their area of expertise. And the reason that they use it outside of their area of expertise is it's a little too uncomfortable to use it in an area that you're an expert on because you immediately see the problems. And so what's scary about that is that drives us as users to use it outside of our area of expertise. Ironically, there's the same number of errors in that output. We're not able to see it. So it looks really, really smart. It looks like, PhD level work. When the reality is most AI tools right now are showing up like an intern. You have to really check the work. And if you don't have the knowledge and capacity as an individual user to check the work and be able to spot all of the errors, it's irresponsible to use it.
Yeah.
And so there's a lot of training and encouragement and pulling up that I think needs to occur within the corporate environment at all levels of leadership, from the C-suite on down to the line.
Sure.
That means helping team members and employees understand how to safely use AI to keep it within their sphere of expertise and be able to use it to go a lot farther. 10% is a huge productivity gain, but it's not replacing your entire job. And a lot of people are looking for I need to replace everything I'm doing, which is not practical for any technological adoption.
Right. Excellent. Well, thank you so much, Dougal. Appreciate you being with us today.
Yeah, thank you.